So far, it's just a couple of central banks. But central banks aren't complete idiots. I mean, they are pretty dumb. They do stupid things. They have corrupted the world economy. They keep us chained into this absolutely flat out evil monetary system that enslaves us and always produces more debt than there is currency to pay the debt. But like I said, they're not completely stupid. They know about the gold-silver ratio. They know that silver is incredibly undervalued. They have been accumulating gold. And, one of my strategies has been to accumulate silver now. And then at certain gold-silver ratios, I'm going to be turning some of that silver into gold. I think a lot of the central banks will be looking at around trying to accumulate more gold, knowing that there is a problem coming with fiat currencies and just the monetary system in general, the markets and so on. And the best way to get ahead of the curve is to try and get as much gold as possible. But with gold already up at the prices that it's up at, they're looking at that thinking that, even though it's at record highs pretty much, they're looking at that thinking that that's a high, where silver is still basically at its 1980 high today, which just doesn't make any sense at all. So why don't you take us through this presentation?
Yeah, absolutely. And the one thing I'll say as we go through it for our viewers to keep in mind is that silver has basically either been considered an industrial metal or a monetary metal, and we're almost seeing an emergence of a sort of a hybrid where it's like a security metal, like a metal of national security. So keep that in mind as we go through here.
Well, it's a metal that tech has to have. Tech can't get by without it. And at the same time, we're starting to see monetary demand, and this will increase as time goes on. We haven't seen the West interested. The West was selling while the East was buying, which I think is sad to see. But this is the one I was wrong on. I said that the central bank had actually purchased, and what they've done is India takes a historic step toward the remonetization of silver. They've made silver a metal that can be used as collateral in loans.
Exactly. So for decades, Indian households have relied on gold jewelry as a primary form of collateral for personal and business loans. The new rules expand that privilege to silver jewelry. So you can pledge silver for loans as well. So sort of recognizing that silver has a lot of value, it has monetary value, it's good collateral, but not quite the same as the central bank buying it.
It's interesting that they put it at 10 to 1 instead of whatever the free market rate is. 85 to 1 is what it is today. So they should, they're somewhat restricted, but it also tells you where they think it might be going.
Exactly. All right. So our second country here is actually Russia. So this is an article back in the summer from June. Central bank silver purchases, Russia leads smart money. So central banks are virtually absent from the silver market in 2024 and 2025, with one historic exception. Russia has become the first nation to explicitly announce silver purchases for state reserves during the current precious metals bull market, allocating over $500 million over the course of 3 years. So Russian central bank absolutely buying silver. They're leading the way, and they may incentivize others.
And if it goes down to, say, a ratio of 20, it means that they will be able to get over $2 trillion worth of gold for this $535 million that they spent on silver. So, they're not completely stupid.
I agree. Exactly. And our next country here, Saudi Arabia. The central bank invests tens of millions into silver. That was about $40 million. And they bought SLV and SIL. So two different ETFs, not the actual physical metal.
The headline should say that the central bank bought tens of millions of dollars worth of claim checks that represent, there's supposed to be representations of silver. But like I said in that original video where David asked me about this, SLV and the other ETFs, I just don't trust them. And the reason I don't trust them is because I read their prospectus and their 10K filings.
Yeah. So those are the three countries you talked about. We've got three more, and they're not explicitly buying silver, but they are treating it as a strategically important mineral. So let's take a look at those. China now restricts silver as a key mineral resource for export control. So basically, starting sometime in 2026, if you want to export silver from China, you're going to have to apply for a license so the Chinese government can restrict how much leaves its borders.
Yeah, this is this is part of the reaction to Trump's trade wars and tariffs. Silver is an incredibly important metal, and China is a major supplier, and that means that they can squeeze all of the tech, all of the AI infrastructure that's going in, all of the solar and batteries and things to power electric vehicles and so on. This all requires silver. And if the West is using more than it produces, and the world is using a whole lot more than we produce, stockpiles are getting low, and then China can put a squeeze on us. And this is part of the posturing and the battle that was triggered with the Trump tariffs.
Speaking of using more than we produce, here are the silver stocks in China. So here we have the Shanghai Gold Exchange and the Shanghai Futures Exchange. And what's going on in China kind of parallels what's been going on in the world. Basically, we had growing silver stockpiles until around the year 2020. And for the last 5 years or so, we've been using up those stockpiles around the world. So this could be contributing to what we just talked about.
Yeah, people are taking delivery. And so look at that huge fall in the futures. The physical shrunk, but the futures, the bets on physical shrunk by even more. People are not trusting the paper contracts as much as actually having it in their hands. So this is a reflection of investors being more nervous and actually taking delivery, pulling it off the exchange. And not just, it's the musical chairs occurring on the Titanic. And you've seen the movie with the little orchestra, that's a string orchestra that's playing. They do stop playing at one time or another. And by that time, there's not enough lifeboats left.
I've been saying this for years now, and it's finally starting to unfold right in front of our eyes. Silver is not just money, not just an industrial metal. It's quickly becoming what I'd call a national security metal. And it's fascinating to watch the global shift take shape. Central banks, who I often describe as the arsonists pretending to be the firefighters of the financial world, are finally waking up to silver's importance. And while I'm no fan of how they've corrupted our monetary system, I'll give them this. They're not completely stupid. They know a good deal when they see one. These are the same institutions that have spent decades propping up a debt-based system designed to enslave entire populations through inflation and perpetual borrowing. They've built a monetary machine that creates more debt than there is currency to ever repay it, a system that guarantees collapse unless constantly inflated. But even these central planners, with all their arrogance, understand one basic truth. Gold and silver are real money. They've been money for 5,000 years, and when fiat currencies start breaking down, as they are now, those metals are the final refuge of sanity. So let's look at what's happening today. For decades, central banks hoarded gold, but ignored silver. They viewed gold as the asset of kings and silver as the plaything of peasants. But now, the smartest among them are catching on. They understand that the gold-silver ratio, hovering around 85-1, is utterly insane. It's completely disconnected from history and reality. For most of human civilization, that ratio floated between 12-1 and 16-1. Even in modern times, 40-1 was considered stretched. So when you see 85-1, you're not looking at a fair market. You're looking at distortion, the product of manipulation, industrial mispricing, and ignorance. And that's where the opportunity lies. Because while gold is already near record highs, silver is still trading at roughly the same price it was in 1980. 45 years later, after endless money printing, skyrocketing debt, and trillions in deficit spending, silver hasn't even broken its old high in real terms. That's absurd. And the central banks that actually study markets know it. They know that the ratio will eventually correct, maybe to 40-1, maybe to 20-1. When it does, silver's upside will dwarf gold's. That's one of my personal strategies, by the way. I accumulate silver now because it's cheap relative to gold. And when the ratio compresses, I'll trade a portion of my silver for gold. You're not just stacking metal, you're stacking optionality. When that ratio closes, 1 ounce of gold might be exchanged for 20 ounces of silver instead of 85. That's a 400% increase in purchasing power without the IRS even knowing you sold a thing. But what's really interesting is that this reawakening to silver's power isn't just coming from individuals or investors, it's now moving into the official policy realm. Governments are beginning to recognize silver as strategically vital. Let's start with India, because they just made history. For decades, Indian households have used gold jewelry as collateral for loans. It's one of the reasons India's gold demand is so enormous. It's both beauty and balance sheet. But now India has taken a historic step toward the remonetization of silver. The government has expanded the rules so that silver jewelry can now also be used as collateral for personal and business loans. Think about that. A government is officially acknowledging silver's monetary value, not as a commodity, but as an asset worthy of collateral. That's huge. It's more than symbolic. It's practical. It means millions of Indians who own silver, not gold, can now leverage that wealth. And while they've pegged silver's collateral ratio at about 10-to-1 compared to gold, that's telling in itself. It shows they expect that ratio to narrow significantly over time. You don't make policy like that if you think silver will stay undervalued forever.
The good old United States of America, the U.S. Department of the Interior releases the final 2025 list of critical minerals. There's 60 critical minerals. Seems like just about everything is critical to the United States now. But they added 10 new ones this year, and silver has finally made the list. So silver is now critical. Who knows exactly what that's going to mean? It could translate into more legislation and regulation, but the United States is recognizing that silver is extremely important.
Yeah, and pretty soon it will be very profitable to invest in mining companies and so on, and to do the investment in all of that infrastructure. And the Silver Valley up in Coeur d'Alene, which is the largest deposit ever found, I believe, that area, a lot of those mines can be resurrected and improved. But for most operations, it's 10 years or more from discovery to production. I did a video on this years ago, the lag time that is involved. Silver goes up, then there's all this investment in the mining sector, and then it takes years for that silver to come to market. And so that happened when silver peaked in 2011, and the silver started coming to market by 2015, 2018, you saw increases. But then we went back into a structural deficit, even with that extra supply coming to market from all of those mines that were opened up or reopened, and we're running out. We've had this structural deficit year after year after year. And so this runs in these waves and cycles. But I don't know if even at $150 or $200 an ounce, if silver is going to catch up with demand over you look at the AI infrastructure that's being built out and the demand that silver will have on it for all of this tech. And at the same time, people are rushing back to it for investment. And when you invest in something like Silver Eagles, you're taking silver off the market permanently. Nobody's going to melt down Silver Eagles to put into electronics. The premium on them is too high. Okay.
Exactly. And our final country, Australia. The government in New South Wales has published their critical minerals and high-tech metals strategy for the next decade, even though they just published it. It includes last year. Kind of strange. Huh. But anyways, in their report, they listed 5 priority minerals and metals, one of which is, of course, silver.
Wow.
And one of the things they said about silver, aside from all the industrial uses that you commented on earlier, they said, additionally, silver has strong demand as an investment product, parentheses, currency. And I just thought this was interesting. And I thought, man, it's supposed to be money, not currency. And it's not really an investment product. It's savings, right? You're trying to preserve your wealth. But anyways, this is classic government.
Okay. So yes, it is money, not currency. And, it can be a currency. Right now, it's not being used as a currency, but it is money because it stores value. However, I've often said that there are these brief moments in history where the precious metals become not just the safe haven asset where they are savings, but the asset with the single greatest potential gains in purchasing power. And that is investment. So I would argue that during this period of time, during the bull market, that it is both savings and investment simultaneously. It's a safe haven, it's savings, it's investment.
Let's talk about what all this really means. Because this isn't just a story about silver, it's a story about the breakdown of the global monetary order. Every move we're seeing, from Russia's silver purchases to India's remonetization policies to China's export controls, is a reaction to the same underlying problem. Fiat currencies are dying. The dollar's dominance is fading, debt is exploding, and inflation is no longer transitory, it's structural. Central banks have trapped themselves in a cycle they can't escape. They can't raise rates without bankrupting governments, and they can't print money without destroying purchasing power. So what do? They buy time, and in the meantime, they buy gold, and now silver. That's why silver's evolution into what I call a security metal is so important. It's bridging the gap between industry, technology, and money. The 20th century was built on oil. The 21st century will be built on silver. Everything that defines modern civilization, electric grids, satellites, microchips, solar panels, AI data centers, depends on it. And yet the supply is shrinking. Here's a fact that blows people's minds. Silver is the only metal on Earth that's simultaneously monetary, industrial, and technological. Gold has almost no industrial use. Copper and lithium aren't monetary. But silver, it's the backbone of technology and the escape hatch from fiat. That's why we're entering what I call the silver hybrid era. It's not just about stacking coins anymore. It's about nations weaponizing resources. Let's revisit India's new rule for a moment. By allowing silver to serve as loan collateral, India has done something subtle but revolutionary. They've reintroduced silver into the financial bloodstream of the economy. They've given it monetary utility. That's how remonetization begins. Not with a decree from a central bank, but with practical policy that redefines value at the household level. Gold started this way centuries ago, first as jewelry, then as collateral, then as money. Silver's walking that same path again. Russia's doing the same thing at the sovereign level. Their silver purchase program is small today, but it's the spark that lights the fire. Because once one central bank admits silver is a reserve asset, others will follow. These institutions are herd animals. They never want to be first, but they hate being last. In China, they're playing a long game that few in the West understand. By restricting exports, they're not just hoarding, they're pricing silver. They're preparing to set the global benchmark for metals just as they've done with rare earths, steel, and energy. Once they have full control over refining and export approvals, they effectively become the global gatekeeper. You want silver? You pay their price, in their currency, under their rules. That's how you end dollar dominance, one commodity at a time. Now combine all of that with the macroeconomic backdrop. We're staring down the barrel of record deficits, collapsing bond markets, and negative real yields. The last time we saw a setup even remotely like this was the 1970s. And back then, gold went up 24 times and silver 40 times. But today's environment is far worse. Back then, US debt to GDP was 35%. Today, it's 130%. Back then, we had an industrial base and positive real wages. Today, we have deindustrialization and stagflation. So when people tell me $200 silver is unrealistic, I ask them, what's unrealistic about math? If silver just kept pace with monetary expansion since 1980, it would already be over $900 per ounce. If it matched the performance of US housing, the stock market, or even M2 money supply, it would be between $700 and $2,000. That's not a fantasy. That's catch-up. That's reversion to mean. And here's the part few analysts dare to say out loud. Central banks will buy silver eventually. They'll have no choice. Once gold revaluation runs its course and silver remains the only undervalued monetary metal left, they'll pivot. It's already started with Russia. It'll spread. You can already see the whispers of it in IMF and BIS research papers. This is why I say the next decade will be remembered as the Great Monetary Reset. The dollar won't vanish overnight, but its purchasing power will evaporate quietly. Governments will scramble to back their currencies with something tangible: gold, commodities, maybe even digital baskets. And silver, with its dual utility, will become the connective tissue of that new system. Let's talk psychology for a moment. Every major silver bull market starts the same way. Indifference, then disbelief, then FOMO. Right now, we're in the disbelief stage. The mainstream still thinks silver's too small or too volatile. But remember, small markets move the fastest when money flows in. The global silver market is tiny, smaller than Apple's cash reserves. So when institutional money starts to move, it won't trickle, it'll flood. Now let's inject a bit of humor. Someone asked me recently, Mike, what's the difference between fiat currency and silver? I said, well, one you print, the other conducts electricity. One gives you inflation, the other powers civilization. The only thing fiat has in common with silver is that both can be melted down, one metaphorically, the other literally. But jokes aside, the next few years are going to test everyone's conviction. There will be volatility. There will be price attacks like the ones we've seen on comics. There will be headlines screaming, "Silver crash," while inventories vanish in the background. Don't be fooled. Every manipulation is a gift, a discount handed to you by the same people who will one day be buying from you at 10 times the price. You can already see the cracks in the facade. Retail supply is tightening again. The US Mint can't deliver coins on time. Premiums are creeping higher. Dealers are running dry. These are not signs of a healthy paper market. They're symptoms of a physical shortage. And when the world wakes up to that shortage, the revaluation will be biblical. You think $50 silver is exciting? That'll be the starting point. The move from $50 to $150 will happen faster than most people can react. So where does this leave you? It leaves you with a choice. You can keep trusting the same institutions that told you inflation was transitory, debt doesn't matter, and gold is a barbarous relic. Or you can trust yourself. You can prepare while the price is still absurdly low. Stacking silver today isn't speculation. It's self-preservation. It's opting out of a system that punishes savers and rewards debtors. It's taking your wealth from the digital realm of digits and derivatives into the tangible realm of atoms and ounces.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.